In part 3, we'll look into depreciation methods, journal examples, and asset register with a template. Depreciation method. One of the methods of depreciation is called straight line method. It calculates the value of depreciation equally over useful life of an asset after deduction of residual final value. If you recall, we already mentioned residual value in the first part. And what we said is that we expect the van or the car to serve us for 10 years, but maybe in the end of 10 years we said it's still worth £1,000. So this £1,000 for us at the end of our useful life of 10 years is residual value. Let's take another example. We have a cheaper asset for 1,000. We paid 1,000. We expect this asset to last 5 years. And we don't expect that this asset worth anything at all at the end of 5 years. So in this case, we divide 1,000 by 5 years and you get depreciation of 200 per each year. If we think that the asset after 5 years still worth something, let's say £100, then we take original price less residual value, and then after that we divide it equally by 5 years. The difference is in residual value. So if you think there is no residual value, you divide it straight by number of years, the expected useful life, or if you think the item was still worth something in 5 years, then you reduce it by residual value first and then divide it by number of years. Residual value is an estimate of future cost less any expenses related to disposal of this item. Residual value is more often used for larger assets such as factories. Another method to calculate the depreciation is called reduced balance or written down value method. What we do here is that we take a fixed percentage, which is really fixed for entirety of this particular asset. If you have different groups, let's say you have computer equipment, you've got vehicles, you've got manufacturing, you've got different assets groups. It could be within these asset groups, let's say computer, you have 10%. The vans and the vehicle, you've got 20%. But once you decided that this particular group or this particular asset has fixed percentage, is fixed. As an accountant, you absolutely need to ensure that you say which method is used, and secondly, exactly which percentage is used, useful life of the asset. So the way it works is very different from the straight line depreciation, because what we have now is that we have an asset in year 1, we paid £1,000, and then we say this asset group is 20%. So what we do, we multiply it by 20%. For the year 1, our depreciation is 200. So the written down value after deduction of that 200, which is our depreciation for year 1, is 800, right? So this is the balance. This is going to be our balance. Now in year 2, we then calculate again 20%, but we use the balance from previous year. So you use the balance from the previous year to calculate depreciation instead of equally spreading your depreciation expense over years of useful life. So this is the biggest difference. So in this case, you will see that we have 160, so 20% out of the balance from last year, 160. Now the written down value again is 800, which was our balance, less our depreciation, 640. And year 3, we take the balance, year 2, 20%, and then so on and so forth until either residual value or until nil. So until it's completely, the balance is gone. And this is the biggest difference between these two.